So very first we will start from assets. What are assets? So any item or a thing which helps business to earn revenue is called asset. Anything which is coming in the business which is helping you to earn revenue, it can be cash, it can be vehicle, it can be any premises. I will tell you examples. Okay. So anything in the business which helps you to earn revenue, uh, which uh, which so there are two types of assets. Two types of assets. Number one, fixed asset and the current asset. And whenever we are buying any asset like a car or machine or a premises, something, we will always record a debit entry. We must remember this is the key for the bookkeeping. Fixed assets are those assets or items or resources which gives benefits to a business for more than 1 year. More than 1 year means anything in the business has a life more than 1 year is fixed asset. Like for example, office or factory building, it has life more than 1 year. Vehicle, it has life up to 10 years, 5 years, 15 years. Office fittings or equipments, like equipments contains AC, generator, table, anything which is kept in the business for more than 1 year and which is giving benefit to the business to earn revenue is your fixed asset. Land is a very good example for the fixed asset. Then we have premises. Premises, like we have a factory building and we can have a premises like for hospital, school, or office building is also the example of premises. So whenever we are buying any asset, any this kind of asset, and we are paying and our assets are increasing, so we will record a debit entry, debit record in the business. So the next is current assets. Current assets are those items or resources in the business which gives benefits to the business for less than 1 year, which are kept in the business for less than 1 year, like cash in hand, cash in bank, trade receivables, customers from credit sales. Means when we sell something, when we sell something to our customers on credit, so it is called trade receivables. So we are increasing our credit customers. So these are also called assets. Inventory. When we purchase goods, raw material for resale purpose, it is called inventory or stock. So whenever inventory is coming in the business, we will record current assets. And whenever assets increase, it is a debit entry. It is a debit entry. And then we have prepayments. Prepayments are the advance payments which are paid by the business, like advance rent, advance rent for building, advance rent for a house, or advance payment for car leasing. So prepayments are the advance payments. So let's move to liabilities. What are liabilities? Anything which a person owes, anything like whether money or something, anything which a person owes or a company owes, usually a sum of money is called liability. Anything which a person owes or a company owes, like for example, individually I owe something to someone, or a company owes something like money or something to a person, is a liability. Usually it is a sum of money, but sometimes people owe some like inventory or items, so they have to repay them. Then, whenever we record liability in the business, it is a credit entry. We must remember, and there are two types of liabilities. As you can see here, there are two types of liabilities: long-term liability and current liability. So very first we will learn about long-term liability. Long-term liability is a liability when a person or a business owes a sum of money to other business for more than 1 year. It is called a long-term liability, and we have a good example of loan. from bank and debentures. What are the current liabilities? So when our business owes a sum of money to other business for less than 1 year is called current liability. Examples are bank overdraft, trade payables like credit purchases and accruals. And we can have many examples for current liability, but I have given some to have an idea. So any liability, when a person keeps a liability for less than 1 year, it is called current liability. But whenever current liability is created, it will be recorded as a credit entry in the business. Means, for example, we take a overdraft facility from the bank. Like bank is paying on the behalf of the business if the business does not have enough money in the bank. So bank is paying on behalf of business. Trade payables are the credit purchase. Means we buy something from our supplier on credit, and we will pay them after 1 month, after 2 months, or after 3 months. So it is a very good thing. It gives you benefit to manage the cash. Yes, number three is accruals. Accruals are the unpaid services. Just like the postpaid SIM, we use services, then we pay. We live in the house, then we pay the rent, or any service which we take first and then we pay. It is called accruals. Let's come to another head of account, which is capital. Very important for the business. When any item or resource is brought by owner into the business is called capital. When any item or resource like money or any resource like building. So now we have another head of account that is called expense. Remember, asset and expense both. Whenever they increase, it is a debit entry. So amount of money or cost incurred by the business to generate revenue is called expense. So whenever expense is recorded in the business, it is a debit entry. And examples are salary expense, advertising expense, car maintenance expense, rent expense, interest expense. So these are the expenses. Examples. These are the examples of the expenses. Whenever these expenses occur in the business, or whenever these expenses occur in the business, we always record a debit entry. But there are some limited examples. There can be many expenses, different kinds of expenses depend on the nature of the business. So these are the most common expenses to have an idea. Revenue or income, amount of money generated by business from sales of product or from any other source is called revenue. Means not only from the sale of your product, from any source your business is getting revenue. So this is called your revenue and income for the business. Mainly we have sales, commission income, discount received, dividends received, and rent received. Sales, like when we sell a product we get revenue. Commission income, for example, for any contract you get a commission income, so it is also increase your income, and it will be recorded as a credit entry. Discount received, for example, you pay your supplier before the time and you get a discount from your supplier, so it will also increase your credit side. Okay, and it will also increase the revenue. Dividends received, dividends are paid directly into the bank from the company. So dividends are also the income for the company, for the business, because there are many companies who buy shares of other companies and get dividends directly into the bank. So dividends received are also the example of revenue or income. Rent received, for example, you have a premises and you sublet a part of your premises to get more rent. So this rent will be revenue or income for the business, and when rent is received, you will record a credit entry.